Welcome to today's video where we will be discussing the best method to see returns in Pulse and PulseX. For those who missed the sacrifice phase for PLS and PLSX and have less than $1,000 to invest, we understand that it can be difficult to get into it. The big question on everyone's mind is, how can you be careful yet guarantee to be a part of the big returns? In this video, we'll be exploring the best methods to see returns in Pulse and PulseX, even if you missed the initial sacrifice phase. Watch this video till the end so you don't miss anything. But before going further, it's important to know that this video is for informational purposes only and does not constitute financial advice. Don't forget to subscribe and turn on notifications to stay up to date with our latest videos. You can also follow us on Twitter to stay updated with the latest happenings, as we update new information on Twitter first before anywhere else. Now, let's get started. If you're someone who missed the sacrifices and with less than 1K to invest, what's the best method to see returns? Do you ratio trade? Or do you wait until the craziness goes down? Well, we've got to say, we don't think ratio trading is the move. We believe it's very risky and it's going to be really hard to know for sure if you're getting a good deal or not. And if you only have less than $1,000 to invest, it's really not worth taking that risk. So we suggest waiting until the craziness goes down so the fork will happen. Then you'll have about a day or two where it will be ratioed. But once we get value, the bridge goes live and we have value. And if you're not understanding that, let us go further. Ratio trading is a trading strategy where you swap one cryptocurrency for another based on their current market values, with the goal of increasing your holdings of one of the currency. The ratio in ratio trading refers to the exchange rate between the two cryptocurrencies. The idea is to trade when the ratio is favorable for the currency you want to hold more of in the hopes of making a profit when the ratio shifts back in your favor. Let's say you want to invest in both HEX and ETH, but you don't have a lot of money to invest. You could use ratio trading to get more HEX or ETH for your investment. For example, let's say you have $1,000 to invest. You could buy $500 worth of HEX and $500 worth of ETH. But if you use ratio trading, you might be able to get more of one token for the same amount of money. Let's say the current ratio of HEX to ETH is 1 is to 0.01. which means one HEX is worth 0.01 ETH. You could use your $1,000 to buy 100,000 HEX at 0.01 ETH per HEX. But if you think the ratio will change in the future and HEX will become more valuable than ETH, you could instead buy 50,000 HEX and 5 ETH. If the ratio changes to 1 is to 0.02 in the future, where one HEX is now worth 0.02 ETH, your 50,000 HEX would be worth 1 ETH and your 5 ETH would still be worth 5 ETH. So by using ratio trading, you've effectively turned your $1,000 into 6 ETH instead of just 5 ETH. You can use the same strategy to maximize your earnings on Pulsechain, but there are some cautions. We will get into exactly that in just a minute. But before that, if you're getting value, make sure to like the video and subscribe to Crypto Pulse. You can also follow us on Twitter for faster updates. Now let's get back to the main topic. However, ratio trading can be risky and is typically more suitable for experienced traders who can make informed decisions based on market trends and analysis. So, while some traders may find success with this approach, it can also be risky, especially for those with less than $1,000 to invest. The ratios may not always be favorable, and it can be difficult to know when to buy and sell. Pulse and PulseX are not yet released, and we believe there is a lot of potential with them. We speculate that the price will do well, but we must keep in mind that cryptocurrency can experience significant dips of 80% to 90% at some point. Therefore, it's important to remain calm. With Pulsechain, the fees are low, allowing us to use the DCA strategy with just $5 or $10 at a time. Although DCA can be difficult, it's a better strategy than throwing all the money in at once, which could be regretful if the price dips. So, we recommend getting some HEX on Ethereum, holding it through the fork and waiting for the bridge to go live. Once there's value, we can start to DCA cautiously. We advise against ratio trading and suggest watching and waiting to see what happens. We don't think we're going to try and ratio trade. So we believe that the best plan to be a part of the big returns, have a chance at the big returns. But also be very careful is to wait until the craziness goes down and to DCA into the tokens So we would suggest that you get a hardware wallet as well, because investing in crypto is all about making a small amount of money into a large amount, and you need to be prepared for when that happens. It's important to be cautious of hackers and scammers who may try to get your Pulse or PulseX tokens. Currently, gas fees on Ethereum are not as high as 2 years ago, so even with less than $1,000, it wouldn't be too hard to DCA some into Hex. We believe that it's a good idea to hold Hex through the fork, wait for the bridge to go live, and wait for there to be value before starting to DCA. So once we have the right value, then it's a good plan to DCA in. And just be patient and be cautious. Being prepared and patient is the key to success in the crypto world. To conclude this video, if you're interested in investing in Pulse and PulseX, dollar cost averaging, or DCA can be a good strategy to consider. DCA involves investing a fixed amount of money at regular intervals, regardless of the asset's price fluctuations. This method can help you avoid investing too much at once when the price is high and can reduce the impact of market volatility on your overall investment. If you're new to DCA or want to learn more about it, we can make a video to show you how to DCA $100 into Hex. This can be a great starting point for your investment strategy, and you can apply the same principles to Pulse and PulseX. By using DCA, you can invest in Pulse and PulseX over time, regardless of their current price. This can help you avoid the temptation to make emotional decisions based on short-term market movements, and instead, focus on the long-term potential of these projects. If you're interested in seeing how DCA can work for you and your investment goals, please let us know in the comments section below. We're happy to provide more information and help you get started on your investment journey. And that's a wrap for today's video on the best method to invest $1,000 into Pulsechain PLS and PulseX PLSX. We hope you found this video helpful in understanding how to potentially achieve big returns with these new and exciting cryptocurrency projects. Remember to always do your own research before making any investment decisions, and consider consulting with a financial advisor if you're unsure. By investing in PLS and PLSX through a DCA strategy and holding them for the long term, you could potentially see significant gains in the future. But as with any investment, there are risks involved, so it's important to stay informed and remain cautious. Don't forget to subscribe to our channel and hit the notification bell to stay up to date with the latest crypto news and analysis, and follow us on Twitter for faster updates. We'll continue to bring you valuable insights that will help you navigate the ever-changing world of crypto investing. We can't wait to see how Pulsechain and PulseX perform in the coming months and years, and we're thrilled to have you join us on this journey. Thanks for watching, and we'll see you in our next video.